Yeah, so the way we will work on this class basically is that every week I will enable certain lectures in the course which you will be able to see from your dashboard. So for this week, there are certain lectures on the website which you will see. They are available to see where they are available to watch now. So you will be required to watch these videos before the during the weekend whenever you get the time. So it's flexible. It's not gonna be on fixed. And then on these classes, these live classes that we are doing like now, we will be going through these videos or these powerpoints in a bit more practical manner. So I will not be repeating everything what we have already put onto the video so that it saves time. So and we can focus more on understanding from the practical experience. If you have some of you have some experience, you have revenue management experience, some of you have income audit experience, so and some of you have just a normal management experience, which is fine. Shomik is arriving. I don't know, Shomik, where are you working?
Hi, pleased to meet you all. I'm working as a chief accountant with a Marriott property in Seychelles
Okay,
for
okay.
the last 4.5 years. So I'm
Okay.
based in Seychelles, basically.
Excellent. Yeah, so you have some chief accountants. So you have we have a bit of experienced audience, which have some experience, some have no experience. So the idea of this class is also to bring everybody together so that we can learn from each other and learn from my experiences. So the purpose of these live classes will be purely on to learn from the experiences. So instead of going through the boring theoretical aspect of what you can learn by reading the books or watching the pre-recorded videos, so you will be required to watch these pre-video recorded the videos. I will be touching upon the brief aspects of all the things that has happened that you might have to see over the week in the on the first day, so that in case you are not able to watch the videos or if you have any problems you can ask. And the second day of the week, we will be learning more on the practical aspects on how we implement the knowledge that we have gained in these last week. So this way you will be able to make sure that you are learning on a week by week basis, and we are able to cover everything practically rather than just theoretical, and I can make sure that you have the understanding. During the middle of this course, this masterclass, we will have some assignments for those who can complete. Please complete those assignments. For those who are not working now or may get a difficulty in accessing the resources, you don't have to worry about. Then we can learn from those who are able to complete something. So it's gonna be not only your learning, but the learning from the is a, like a combined learning, right? So let me share my window so that you can see what we have. So anybody have seen the videos, or you have not seen it at all?
I've gone through.
I
Me
have
Okay,
gone through.
personally, I have gone through all the videos.
I
okay,
have gone through. Yes, sir, me too.
okay, excellent. Yeah, so that would be good. Then we don't have to really go through it again in deeper details. We will just cover it basically in a basic manner. Where do I see this? Okay, so you should be able to see the screen now, right? Uh, you should be able to see the presentation now, right?
Yes, sir.
Yes.
Excellent. Yeah. So the hospitality finance. This week we are just learning about the basics. We are learning about each other, and then we are learning about how hospitality finance interacts with the other departments and how is it structured. So if you have seen the videos, you will see that I have explained the normal hospitality cost structure. So this cost structure is not necessarily same for every type of hotels. The hotels and resorts may have a different structure. So in revenue, in rooms division, so basically it's divided into five main departments from the point of view of an organization. There is a rooms division, which is headed by a director of rooms or a front office manager in case of small hotels, or by EAM in case of very large resorts, which they have the other facilities. And it compass usually the front office, housekeeping, concierge, and other services. And if they have a EAM, usually it's also oversee the spa, laundry, transportation, gift shop. So basically, the other operating departments are also managed by the rooms division manager. Then there comes the Fnb department. So Fnb department will be managed primarily by the director of Fnb, who has the ultimate responsibility for profit and loss. But usually there are two main heads of Fnb department, one for Fnb service and one for Fnb kitchen. So in F&B restaurants, usually there can be a all-day dining restaurant, which is a standard in almost all the three-star, four-star, and five-star properties. The lower than that may not have all-day dining restaurant. There are some fine dining restaurants are there on the five-star properties. Usually, it's a requirement to become a five-star property to have specialty restaurants. In some countries, the number of specialty restaurants or requirement may be different, but in general, a five-star property has a all-day dining restaurant and a couple of specialty restaurants, which can be a native restaurant. For example, in India you will see an Indian restaurant. In Thailand you will see a Thai restaurant. In Europe, European countries, you will see a European restaurant, which is a fine dining restaurant, or a French or an Italian restaurant. There may be other restaurants, for example, depending on the type of customers that the hotel is or resort is catering to. If they have more Chinese customers, they may have Chinese restaurant. They may have a Japanese restaurant. They may also have Italian or a French or any other type of restaurant or a grill house or a bar, depending on what type of customers the hotel is actually targeting. So if it's a meeting resort, sorry, is a meeting hotel which is only on the meeting basically the business guest, it may not have many fine dining restaurant, but maybe it has a bar, so that it can entertain the guest. So every specialty restaurant usually accompanies with a kitchen, and they accompanies with the chef in charge. But overall management of the kitchens is usually done by the executive chef. So this way, the peoples are able to manage the hotels are managed able to manage the F&B department in two main aspects. One is the F&B service, and one is the F&B kitchen. Then you have the other operating departments, which is spa, laundry, transportation, and gift shop. As I said, it's usually managed by the EAM of rooms. If they don't have a EAM of rooms, it can be managed by their own respective directors, and they may report directly to the GM. But usually it's either by the director of rooms or by the EAM. Then there is an administration department where there are sub departments for finance, for HR, and information technology. Then there is a GM. They normally have their own directors, but all are reporting back to the general manager. And they have a security department separately, depending on how big is the resort or how they are managing the security. But usually for five-star hotels, a director of security is indispensable because of the fires, fire life safety, and other type of safety requirements. Then there is a sales and marketing department, which is divided into subsections for one is mainly for reservations, revenue, sales, and marketing. The marketing may involve also the digital marketing and communication department. Sales usually is a separate department altogether. It may also include the event sales and also the event management. So it depends on the how big is the hotel. There may be one director of marketing separately. Then there can be one director of sales, and there is no director of sales and marketing. But it may also happen that there is a director of sales and marketing who is taking care of both the departments with their respective managers. So it really depends on how the property is structured and what kind of market is targeting. If they have more on the public business, then they may have a better, strong revenue management and strong marketing department and strong reservations department to cater to the individual guests. If they are heavily dependent on the travel agents or corporate companies, their sales department will be more organized compared to their marketing department. So it depends on the how the hotel is structured. Then there are maintenance department, which is usually managing the preventive maintenance or repairs, general repairs, and also the major renovations. So for major renovations, it doesn't happen in the hotels every day. So there are usually project management, which is managing the projects. So this is the overall structure of the hotel. Any questions about the overall the hotel operations and cost structure, or
Oh,
any
so
other
it's
point?
clear, pretty
Yeah.
much.
So basically, when you are doing the, so how is it relate to the cost, to chief accountant or to the finance department? Basically, you need to understand how what are the critical areas of the hotel to decide what kind of cost center you will do. So in hospitality, as you may be already aware of it, they works on a cost center department, right? So costs, there are cost center for each department. There may be a cost center for only rooms, or there may be a sub cost center for front office to housekeeping to concierge to track the cost of each department. So the revenue, since the revenue is combined, right? Room revenue is for every hotel, every department, but the costs are not. The costs are managed by department by department. They have their own budget. They may have to prepare their own operating budgets, and they will be measured against this. So if you don't have, let's say, a big front office department and concierge department is smaller, then you don't need really a cost center for concierge to separate the cost. But if concierge and other services are quite big in the resort or in the hotel, you may need a separate cost center. So how you will decide whether in your accounting you need a cost center or you don't need a cost center? So the general idea of the having to establish the cost center is two. One, what is the leadership? Is there any separate leader who is responsible for the cost and revenue for that particular department? Then the other is the labor cost, because in hospitality it's all human oriented business, right? We have majority is the labor cost. If the labor cost is the labor is separate and the leadership is separate, then it means that the cost of that department can be accumulated and can be measured separately. So you need to have a separate cost center for that particular department and measure all their expenses, all their revenues in that cost center, so that you can actually evaluate the department's ability or department's performance on a regular basis. So that's the importance of for you to understand what is the real the cost structure of your hospitality operations. So even though as a part of your learning, you may want to develop your own organization structure based on the how it's reporting and what kind of cost centers you have in your experience. So you may want to think about it and prepare. If you wish, you can send it to me so that we can have a discussion. We can discuss that on the tomorrow, if you are able to do that. It's not a big assignment. Then a typical organization chart for a hotel finance team. So within these organization structure of the hospitality, we have a finance and procurement department which is separate. It's a small department. Usually, it's only a support function. So the hotel finance team usually works as a support function to other departments. And the main job of the hotel finance team is to provide the analytics, to provide the data for the operation leaders to make the decisions based on the real data. So you may have to provide them the useful data to make the cost-based decisions, to make the revenue decisions. For revenue, they basically would like to know where the revenue is coming from, how is it earned, what are the statistics related on the relative information, right? For example, in the rooms or in the spa, they may want to know how is it relate to my guest rooms, how much is it, how many are outsider, how many are insiders, how many are taking my day massage, how many are taking my all massage, how many are taking my shop revenue. Even though sometimes the property management system are able to track this information easily, but the role of the finance department is to make sure that this is correctly measured. So who is the responsible department to make sure the revenue is structured correctly? Who does it? Anybody?
The income audit, the income auditor.
That's right. Is the income auditor who need to make sure that the income is recorded accurately and all the statistics are recorded accurately in line with the in line with the hotel's procedures, right? So this is there are
Right.
standard procedures on usually there is no that's the reason why we have usually to make sure we have a constant or a consistent definition of the statistics so that every hotel is following the same and we are able to compare if this is an outside guest, it's an in-house guest, and how we need to structure our massage, the revenue segmentation. Same way for the cost. The finance department is to also make sure that there are enough segregation between the variable cost and the fixed cost and how they are related to the business. Maybe it's related to the number of covers, number of guest rooms, number of spa guests. So who provides the expense information usually? Who is responsible for that kind of reports? Cost controller is providing the information from mostly the stores and other things, but there are other expenses, right? So the overall information will come from where? It's come from
From the chief accountant or the second in charge of the department. He or she should be the one in charge of reporting all the expenses for each department.
yes. So it's gonna be the chief accountant's job to provide this kind of information to the other departments by themselves, right? So usually we have to break down the expenses into details and give that information to the departments so that they can make their own analysis and can make decisions faster rather than having them to do their own analysis. So it's important when you are writing your JVs and when you are writing your the general ledgers, you have to provide enough description into the lines so that the operating department heads can understand the expense easily. Sometimes, as in my experience, at least we sometimes we provide the descriptions which is easy for finance to understand rather than the departments. Sometimes departments are coming back and asking them what does it mean, and we are using the shortcuts or shorthands which is easy for us to understand but not for the department. So two ways: one is write down the description which is easier, or provide them the standardized the shorthand that you are going to use on description. Sometimes there is a character limit in the description, so you have to use the shorthand, which means you need to have a definition of what you are writing and give it to the departments. So in typically in the organization chart is headed by a financial controller, which has a confidential secretary, and their job mostly is to help the budgets, maintain the contracts and the expatriate payrolls, and keep the confidential information from on the hotel, which is interested to the financial controller. And then there is a payroll and a general cashier. A bigger hotel may have a separate payroll and separate general cashier. A smaller hotel may have only one payroll and general cashier who is handling both the responsibilities. Then there is an assistant FC who is responsible for mostly the general accounting, which includes the chief accountant, AP, GL, credit manager, AR, and income audit team. Then there is a cost controller. In smaller hotels, cost controller may report to assistant FC. And in bigger hotels where they may have multiple restaurants and cost controller has much more responsibilities, it may report directly to the financial controller as well. So the cost controller is responsible for store and receiving and general cost control department to do the costings, to create the menus, to do the to do the mystery shoppings, to do the spot checks and everything else. Then there is usually a purchasing director. For the sake of integrity, the finance team, assistant FC, and cost controller are not given any authority over the purchasing department, so that there is an transparency in the pricing and receiving. And then there is usually if the hotel is big and is listed, they may have a corporate controller or internal audit manager or internal audit director, or it can come from a corporate office. If let's say you are working for the chains like Shangri-La or any other Marriott or other group chains, they may have their internal auditor coming out from the corporate offices. So they may not have a corporate controller, but internal auditor will come from the other corporate offices. That's usually a finance structure. Anything that I'm missing? Anybody has anything else? Have seen any other person in the organization structure of finance?
No, I think this should cover basically all the departments, all the structures of a finance department. In a
Hmm.
mid-sized hotel or a big size hotel or even a smaller scale hotel, I think this should cover the entire hierarchy of the finance department.
Yeah. So it's smaller hotels, especially nowadays, the structure of the finance department can vary from hotel to hotel. There may be less positions now. The credit manager may also be managing the AR team, or the chief accountant may also be doing a job of income audit manager, or there may be no income audit manager. The cost controller may be handling the store and receiving by themselves with a couple of staff, or the store and receiving is the one department itself. And I mean, there may be no costing team. So it depends on the size of the property. The functions are going to remain the same, but how many peoples are following, how many functions are performed by one person, or how many peoples are taken to perform one function, it depends on the size. For example, in a hotel where I work, I have 15 hotels, but we don't have a separate person for each hotel, right? So we don't have a APGL team. So we have a centralized functions as well for taking care of the cluster of hotels. So we don't have a chief accountant at every property. We don't have credit manager at every property. We don't have APGL at the properties. We don't have AR at the properties. We only have cashiers. Payroll is centralized, and then there the store and receiving is done by one person. No other person for costing is usually done by the finance manager of the property, and then purchasing is also done by the same person. So it depends really on how the organization has been structured. In case of multiple properties, we normally try to take advantage of the large scale. So we may combine, or you can say clusterize the functions for AP, GL, AR, so that the less people can do more job. So that's the finance structure, right? So as we know, the finance functions within finance are income audit, credit and cost, credit controls and collections, general accounting, payables accounting, purchasing, and the control and analytical services, which is usually done by the assistant financial controller. These are the main functions within the finance department, and these functions are closely integrated with the other operating departments, because as I said, the finance department is supposed to help the organization. So as you will see in the videos, there are we deal with the sales and marketing department, reservation department, front office, food and beverage, engineering, human resource, and other departments. Right from the when the guest is even booking the or booking the hotel, right? Not when the guest is check in or check out, but even before they show any interest. So sales and marketing is usually gonna ask you about the website with the sales, where the SEO or SEM. They may ask you for the money or the budget. There may be you may want to collect the deposits when the guest is making a booking. So reservation department may bother you for that. The You may have to set up the payment collection procedures for the site offices or remote offices. Maybe you have a sales team, regional sales team somewhere else, who may be working on behalf of hotel. There may be representatives. The front office department is constantly coordinating with finance when whether the guest when at the time of guest check-in or check-out or during the stay for paid outs, for rebates, for discounts. So every department is having an interaction with the finance department, and finance department supports every department. So it's not that only finance department is touching with every department. Every other department is also integrated with each other. So it's not just so it's a become like an orchestra. If you see, there is a pianist, there is a guitarist, there is a general drummer, but all of them has to work in sync. Otherwise, the song is not beautiful. That's the beauty of the hotel, and that's the difference in hotel and other industries. So with the sales and marketing, usually you help them in the marketing analytics, business segmentation, ROI on the marketing spend. Business segmentation is done by internal auditor. ROI on market spend is done by the chief accountant or assistant FC. Finance is also helping them in rate charts, setting up the budget approval for trade show, marketing, or approving the travel advance and everything else. And then also accounting for barter. Barters are a very integral part of the hotel finance structure, because the sales and marketing nowadays many times try to do barters rather than paying the cash, because rooms does not cost that much in value to the hotel, whether they compare to the other hotel. A room which is in the market cost at $100 may cost the hotel only $10 in terms of electricity or in terms of amenity cost, while the value for the other person is $100, right? So it's better to do the barters to save the marketing cost in cash. That's why barter deals are very important, but the valuation of the barter deals and the accounting is also equally important, so that the correct expense is charged in the correct time. Otherwise, your expenses will be charged in the month when it's not related to. When the front office or other operating department, usually you have the rates for services, menu pricing is done by the cost controller or by the income auditor. Then you have cost control analytics given to these departments based on their store requests, based on their menu requests, based on their consumptions. And then you have incentive calculations and payments, which is also done by finance. P&L analysis for them, store issuing, PAR controls, how we set up the PAR for their operating, and we'd also do the spot checks for their stores and for their cash and other things, right? So this is how we deal with the front office department and other operating departments. So the same way we deal with the front office, spa, laundry, every department. At food and beverage, we work in similar way: menu pricing, menu engineering, cost control, spot checks, incentive calculations, P analysis, store issue, par controls, and cost control checks. Engineering, we normally manage for them the maintenance, preventive maintenance contract. We do the payments for them, right? We issue the stores to them and do the budget approvals, manage their project expenses. So we need to make sure we work with the engineering on a close coordination to make sure that we know all the projects which are being done in the hotel, so that we can make sure that the expenses are recorded properly. We need engineering help to understand whether this repair expenses or the renovation expenses which we have to record should be going to capex or should go into the renovations. As a finance person, we may not be able to understand whether certain expenses are going to increase the life of the asset or is just a regular maintenance, which will impact our accounting in a big way. In first case, we have to put it into capex. In the other way, we have to put it into the expense. So we have to have good relation with the engineering, so that we know whether the renovations and the repairs that we are accounting for, it should be going into capex or it should be going into the repair expense, and in which department. Now we have a multiple line of codes in our P&L where we have to segregate the expenses, and as a finance we may not be experts in understanding each and every expense. It's the engineering department who may understand well. So it's a relationship between the two departments, and the two managers to make sure that we are doing the correct accounting. Right. With the human resource, you are managing the payroll, doing the labor productivity, and the labor cost management for benefits and other incentive pays, overtimes, and many other things. Right. So, any question about the how the finance department interacts, or anything you think is missing?
So I just wanted to check something on
Yes.
the capex
Yes.
budget. Usually, every property they have a certain percentage allocated for capex based on their income for the previous year. Like certain properties will have 5%, certain properties will have 7% or 8%. So does that vary to property, or is there any other way to build up a capex budget?
Yeah, it depends on property to property, and it depends on whether the property is a new property or is an old property, right? So new properties usually requires much less capex because it's just new. So you may be allocating only 1% or 1.5% on the on those properties. When the property's age is growing, right? Maybe it's in the fourth year, in the fifth year. Usually we need a replacement, and it depends on what type of standards the hotel is trying to maintain. If it's a five-star hotel, it can spend anywhere between 3 to 5% on a regular maintenance. So it depends. There are two different things in capex. One is just a
Hmm.
regular upkeep of furniture, fixture, and equipment. Just only whenever, because let's say for example a computer is gonna go by the age of third or fourth year. Most of the furniture,
Yes,
which is loose furniture, is also going by the
libraries.
fifth year. So it depends
Yes,
on the type of
libraries.
equipment. Usually, the five-star hotels, they are very strict in terms of brand maintenance, right? So they allocate
Right.
around 2.5% of their revenue to this kind of
Hmm.
capex. This is general maintenance. Then there are certain types like a new requirement, which is a new legal requirement for life and safety or a fire control, or there may be a
Hmm.
major a new restaurant development, a new concept which requires extra capex. So that is there is no limitation to it. It depends on the ROI of the capex spent and is it necessary to do it by law. So they you cannot control that by regulate that by the percentage to revenue. So that is separate. That is managed separately from the property. But there are certain times the chain hotels, right? For example, Shangri-La is a chain, Marriott is a chain. So they
Hmm.
may dictate in their hotel management contracts how much percentage of FFA reserve the hotel has to maintain in their P&L, which will be spent on the next year. So it's usually can be in the range of 3 to 5% or 2% or 2.5%, depending on the negotiation between the operator and the owners. But the key consideration here
Hmm.
is the age of the property and the brand maintenance that hotel has to maintain.
Or you
Does
can
that
have a
answer?
preventive maintenance as well, like PIP, property
Yeah.
improvement.
Yeah, PIP is a different thing. PIP is usually done when you are taking the hotel under the management for the first time, right? So to maintain it up to the
Hmm.
brand standard, there's usually a property improvement plan. But it may also be happening at the time of maybe every 5 year, every 7 years. The management contract may dictate that every 7 year, every 10 years, there will be a PIP program to upgrade the hotel
Hmm.
facilities.
Okay.
Okay. Any other question?
Okay. Mhm. From my side, sorted. Others, I'm not sure.
Others?
All good, sir.
Okay. Okay. You can always ask questions if it's required. You don't have to worry about it. Okay.
Okay,
Okay.
sir.
So the next thing that we want to discuss was what is usually and why is it necessary. Now, why we are discussing usually is because usually is the cornerstone for hotel accounting, right? It's the full definite full name is Uniform System of Accounting for Lodging Industries. As far as I know, it's still 11th edition, but I think there is I saw somewhere is going to be issuing the 12th edition, which I have not yet checked. Does anybody know, is it 12th edition is out or is still 11th edition?
I think it's still the 11th one. I haven't seen the new one yet.
Yeah. Well, I will check that out if there is any 12th edition, but there may be certain recommendations issued based on the pandemic. So there may be certain things which are changed because of to ensure that the accounting during the pandemic is same, because every hotel may be treating the number of rooms closed or the forced closure differently. But a uniform system of accounting is important for providing the standard for the hotel and the terms which are used in the industry as a whole. So whether it's a resort, it's a one-star hotel, a five-star hotel, it's a chain hotel, it's a owned hotel, however it is, it has to follow the same structure of the accounting. It has to have the same format of P&L, set of P&L, maybe not the format exactly, but the same line, same terminology used in the profit and loss statement. It usually prohibit to add more lines and reduce the lines from the P&L, but hotels are usually creative in their own way and adjust the usually for their own way of operating, because every usually is just a standard guideline. It doesn't have to be same for everybody, but certain things like what is the definition of revenue, how do we calculate the ADR, RevPAR, and certain key matrices are these definitions are going to remain the same. The P&L format may difference, which we are going to see now in a bit. So the conformity for the it serves also the conformity for the purpose of comparison in a year to year basis or within the peers. And there is a lot of management companies which use usually as a basis for accounting to avoid disputes, because their GOP is gonna based on, let's say, 5% of the profit. Now, how profit is calculated? What expenses should go to the owner's account, what expenses should go to the general operating maintenance, what kind of revenue is a general operating income, and what kind of revenue is a miscellaneous income on which management fee does not have to be calculated, and how the revenue is going to be calculated, whether it's going to be gross or net. So to ensure that the hotels are not creating their own accounting to save the management fees, the usually serve as a basis for audit and for serve as a basis for accounting for both, and it also help to reduce the different to disputes between the owner and on the managers. So usually has a structure. So main you can call it a package of the hotel financial reports, and the main components of the financial reports is going to be the grand P&L, a room division P&L, where which is going to be attached with its occupancy, rate statistics, revenue segmentation, and all of the formats are given in the usually. So in the as a part of this course, I have some separate courses on the usually, which I will be providing you the link starting from coming Monday. You have to register in that course. Means you don't you just have to start the course. I will register your email IDs into same email IDs into those courses as well. So you will be required to complete those courses. So in the course, in this master class itself as a lecture, you will just see a link or to that course. So for example, there is one course for rooms division. So there will be around 2.5 hour of worth of videos. You have to go through them, where I have explained about all the terms that are used in usually, revenue segmentation, and how what we put into different lines of account. So you have to complete that. Then next week on the Saturday, next week Saturday and Sunday, we're going to discuss about the requirements of usually for rooms department. Then next week you will be given the link for the Fnb and operate other operating departments, and the next week you will be given the other departments. So this month, visually, we will be focusing more on usually, because it covers varied aspect of the hotel's accounting, and you will be able to understand how we create the chart of accounts, how do we create the controls, how do we create the P&Ls, and how do we analyze them as well in this month via the usually course. So then there is a F&B division deck, which is usually there is a outlet wise profit and loss statement, cover analysis reports, and food cost reports. Even the food cost reports are some certain reports are part of the usually format. Largely, there is no standard for food cost report, so it depends on the hotel and the cost controller how they are structuring their cost report, and it's usually a part of the hotel financial operating statements. And other operating departments also have their own department P&Ls and their own operating statistics. Then there is another one for administrative and general, sales and marketing, information technology, and maintenance and utilities. Now, some hotels may not be following in information technology as a separate department. They may still be following. They may still be merging that together with the administration and general. So there may be three main and distributed expenses: A&G, sales and marketing, and maintenance and utilities. But many hotels now, because of usually has changed for quite some time already, so many hotels have moved on to create a new departments, not new cost center for information technology. So we will be assuming that you have already created these separate departments for information technology. And this is a standard format that is given by usually. So you can see, just to explain you a little bit, it includes the two sections. Most of the P&L will include two sections, one for statistics and one for the revenue and expenses. So here the expenses are stopped at the operating expenses, mostly the hotel operating. Other departments will only have up to GOP, and after GOP, everything is combined as like management fee and the other expenses, non-operating expenses, income, rent, property, insurance, and everything else will come under the main P&L. So this is the main P&L, which is usually the starting point for any financial analysis or any P&L meeting. We look at the main P&L first, and then we look at the individual P&Ls by going into under by understanding where the problems are. And all the P&Ls is divided into two main parts. One is for the month, for the period, which is usually a month. Most of the hotels in the world nowadays are following monthly financial statements, so you have to close month. And then there is a year to date, right? And both periods are further divided into three parts. One is the actual budget or forecast, if you already have that, and previous year comparison for the same month. And each column is in further divided into dollar value and percentage value. So percentage value is usually is usually calculated with the total revenue of total operating revenue or total operating revenue of that particular department when we go to department. And sometimes some of the expenses like departmental expenses, they will not be calculated based on total operating revenue. They will be calculated as a percentage to where they relate to. So most many in other departments as well, you will see this percentage is not always calculated based on the total gross operating revenue. It's sometimes calculated based on the specific line in the revenue where it's whenever it's possible to do that, so that we can have a clear relationship between the expenses and the revenue and we are able to analyze it better. So this way of P&L will help us to understand the profit and loss from both horizontal perspective by looking at the previous year and vertical perspective by looking at the ratios of expenses compared to the revenues. And we are able to relate them with the statistics. For example, occupied rooms or the ADR or the cover served in the restaurant when we go to the restaurant P&L. So that's the overall structure. We will be discussing these P&Ls in more details when we look at the usually course. You will be able to see that. So here is again another example of a simple profit and loss statement which is filled up, and there are statistics which are extra from usually mandated usually. So here you will see is different. Like some hotels are putting the FTE, labor cost, F&B profitability, and the profitability. Some are adding the flow through here. So it depends on the hotel how they want to take it. This one is taken from the Shangri-La. So, and somewhat now maybe they have already changed, but this is quite some time back. And then the other departments also have their own standard profit and loss statement. And there are certain times the simplified version of the profit and loss statement. So I will be sharing with you this Excel file for the sample profit and loss statement, just so that you can have a ready reference to build upon the P&L. So this is the standard P&L for the other departments. We will not be discussing them in more details here, so that we are able to we will be able to look at them in more details in the coming weeks when we are looking at the individual courses for the individual department. So now we will stop here because we will be looking at the fundamentals of accounting tomorrow and how we are going to structure the finance department or the accounting structure for the hotels. So any questions so far on this aspects?
So all clear from my side.
Okay. Subodip,
All clear for myself.
thank
No,
you.
sir.
Saif,
Thank you, sir. All good.
okay, okay, excellent. So, so every day we're gonna have only a session of 1 hour because I don't want to hold you for more than 1 hour. I think the concentration level is at peak already, right?
No, it's fine.
So, because I have learned that after 1 hour of class, usually the students lost the teacher. So that's why I keep my classes only at 1 hour every day. But we're gonna be meeting at the same time every week and until the end of September, I think June, July, August, until end of August. If the course is not finished, you don't have to worry. We will continue to have the classes, and I will be recording these videos and uploading them to the class so that you can always come back and refer to it. If you have any questions, you can always post it in the class or you can send me the email later on. Okay?
Okay, sir.
Okay.
Okay,
Uh,
sure.
yeah.
Yes, sir.
Thank you. If you like the class and if you think there is any other of your friends or peoples who may get benefit by this class, you are free to recommend to them. Um, and there will be a small gift if you do that, just out of token. We have many other courses, and we will be running a financial controller masterclass after this basic session, which will be more on leadership and decision making rather than just only the basic accounting. Okay, so you can always refer. We still have the enrollments open until this end of this week or next week because there's only 1 2 weeks only gone, and the people can still easily catch up on to the course.
Mhm.
Okay.
Okay. Okay.
Okay, thank you very much,
Sounds good.
and we'll see you tomorrow.
Yes,
Same
looking
time?
forward to that.
Yes, sir.
Okay, okay, thank you. Bye.
Thank you
Thank you.
and have a good day. Thank you very much.
Yeah, thank you.